What is going on, Gold Mines? This is the founder and CEO of Gold Mines, Dimitri. And today I am here to teach you about risk management. Okay. A lot of people don't realize risk management is what keeps you in the game. Matter of fact, risk management counts for 90% of the game, if not 100% of the game. Okay. Now, a lot of people don't realize that when you don't use risk management, you could potentially blow your entire account. And I don't think that registers to a lot of people because a lot of people continue to do it over and over and over again. Okay, so if you were running a marathon or running a race, okay, it would matter if you came first. It might even matter if you came second or third. You might get incentivized for coming second and third. However, when you're doing Forex, when you're running a marathon with Forex, it doesn't matter if you come first. It doesn't matter if you come second, third, fourth, or fifth, or sixth. You could run at your own pace as long as you cross the finish line. That's the only thing that matters. Nothing else matters. Looking cool, throwing big lot sizes doesn't matter. So would you rather look cool or would you rather be rich? That's a question that you have to ask yourself today. And when you are rich, you can definitely look as cool as you want to be. So before we get into that, I just want to give a quick disclaimer. Trading does require risk. You guys shouldn't risk any money you can't afford to lose. This is not investment advice. This is just solely my opinion and my views of what I think of the market. Trading foreign exchange on margin carries a high level of risk. It may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite, and the possibilities exist that you could sustain a loss of some, if not all, of your initial investment, and therefore you shouldn't invest money that you can't afford to lose. So just wanted to have that quick disclaimer there. So we're on forex21.com, which is a forex compounding calculator. You're more than welcome to go to this website and punch in the numbers and see what kind of risk appetite works for you. I personally would suggest starting at 500. Okay. I mean, everyone's going to start. Some people may start at 1,000. Some people may start at 5,000. It's totally up to you. Okay. Let's just say you're starting at 500, and you're risking 10% per month. And mind you, no one's giving you 10% even per year. Okay. Let alone per month. So you're in your own class. The power of compounding is extremely powerful. Einstein said it himself. He said the compound effect is the most powerful force in the entire universe. So, if we catch 500 pips and you're just risking zero point 0.1, which is $1 per pip, you're making $500 a month. I really don't think that a lot of people are letting that sink in. An extra $500 a month. Let's say you're making $2,500 a month and you're making an extra $5,000. Now you're making $3,000. You just added an extra $500 to your income that you didn't have before. It doesn't matter if you had $1,000,000. It's an extra $500 that you didn't have before. Okay? And a lot of you I see will throw huge lot sizes and don't realize, like, hey, I'm freaking out right now because you're taking your phone to the bathroom, or you can't stop looking at your trade, or you're asking, what's the take profit 100 times. So you want your trading to be super cool, and you want to feel okay when being in a drawdown, because when you're in a drawdown, you feel anxiety, you feel all these different things. You feel you may have taken the wrong analysis, the trade is not correct, and you exit out of the trade due to your emotions because the lot size is so big. But if you had $1,000 account or $2,000 account and you were risking $1 per pip or even $3 a pip, you wouldn't feel that much anxiety because your accounts can sustain that drawdown. But if your account can't sustain the drawdown and you're feeling nervous or you're feeling a lot of anxiety when you're taking the trade, then that lets you know that you put too big of a lot size. That lets you know that you're risking money you can't afford to lose. So that's why it's so important. Now, let's say you were to start at 500 with 10% a month in a number of 24 months. Within 24 months, okay. Oh, sorry, let me recalculate that. All right. So you're at $4,924.87. Most of you can't say that you have $4,924.87 in your bank account right now, because the average person doesn't even have $2,500. So this is money that you didn't have before. And it doesn't seem like a lot, but as time goes by, it's only going to get bigger and it's only going to get better. Now, let's just say that we're doing 30% a month, okay? Even 30% a month. On 30% a month, you start off at 650. It doesn't seem a lot, but a snowball effect comes along. Okay, then you're at 8,000, then 11, then 15, then 19, 25, then 33, then 43, then 56, then 73, then 95, then 123, 126, $271,000. How many of you can say that you actually have $271,000 in your bank account? Not many people can say that, right? Let alone 10,000 or 2,000. So this is the power of the compound effect at just 30% per month. Okay, just 30% per month. We caught over 500 to 600 pips this month. Okay, so you guys have to realize the long-term power. It's not going to happen tomorrow. It's not going to happen the next day, but it could happen next month. But it could happen the month after that, and the month after that, and the month after that. So this is the result of you following trades and you using risk management to stay in the game. Because let's say you did start with, let's just say you started with 1,000, and you're risking $10 a point, and the market moves 50 points against you, that's 50% of your account that you're losing, that you didn't have to lose. Now, if you're risking $1 per pip and the market moves 50 points against you, then you're only losing 50 bucks out of 1,000. It doesn't seem that bad. See how that's just same exact trade, different risk management. Same exact trade, different risk management. So that's why most people lose, and this is a tough game for people because they want to get rich tomorrow. They want to get rich the next day. They want to get rich right now. They want that instant gratification. And instant gratification kills you in trading. Greed kills you in trading. So that's just my tip that I would give you guys. And of course, happy trading.